All right, so we talked about Marathon yesterday. So today, let's take a look at this name. 8.5% down Friday, April 12th. One more week until halving. And just like yesterday, I talked about this name. I am neutral. I'm not long. I'm not short this name. But here's what I'm watching. So let's take a look at the purely levels, and I'll share a little bit of geeky stuff, maybe basically basics, what I watch when I trade a stock, like in terms of valuing with it, whether it's worth to buy at certain levels or not. So 1550, that's the support I will be watching from here for the stock. So 200-day moving average right here, right now, 1610. That's where it's sitting. That's where it closed. And what does that mean? I mean, it's just basically over the last 200 trading sessions, that's the average price people paid. But this level hasn't been tested since November breakout. When it broke out of last year, broke out of this 200-day moving average, that was the strong move because it did consolidate a lot. So after stock pulling back this much, how much? Almost 50%, right? More than 50% from its highs, recent highs. Well, think of it like falling from a multi-story building, right? If somebody does that, I mean, it takes time to recover, right? You're not going to just get up and just try to run back up to where you fell from, right? So same analogy. I mean, that's just, I don't know if it makes sense to somebody, but that's the point, is that it will take time for the stock to consolidate and try to push high. Okay, it's not gonna straight shoot up. Why? Well, there are many back holders here now. There's a lot of people will put pressure, and there are a lot of people, even in my comment sections, where I make a video about something that I'm bearish on, and I'm not going back. I just look at the comments, and that video was made like weeks ago, let's say, or months ago. And there are people, oh man, I wish I sold it back then. I'm waiting for any pop, and any pop I'll get out. That's the psychology. I mean, it happened to me when I was starting, and it does happen sometimes where I get in, I don't have a plan where I'm going to get stopped out or where I will take the loss. A lot of people go into the stock without any plan of taking any loss. They go in thinking that they're going to make money 100%. But another loser psychology, if you don't sell, you don't lose money. Well, it's opportunity cost. I mean, you can go to zero, or you can go like Neo, right? There's so many people, like my friends. I know those people. They paid they're hardworking people, right? They were making money, pretty good money right here when transportation business was booming. They loaded hundreds of thousands of dollars of Neo at these levels, and they're still holding this name because they don't want to take a loss. But they're hundreds of thousands of dollars. I mean, I know people who got divorced because of this shit. So you have to have a plan to take a loss. For me, it became robotic. Like, I don't even think about, it's just a number, okay? If stock doesn't go in my favor, doesn't matter. I'll get out quick so I can focus on next opportunity. It doesn't work out, perfect. Next, I'll move on to something else. So this is just a rant a little bit, but if it does slip below $15, it can come back to test this 12, 10, 750. It can happen, okay? One thing I wanted to show, when you watch any stock, pay attention to market capitalization. Why do you guys focus on price so much? So one thing, very, very simple thing, nobody talks. No media will talk about this one. I don't know if any YouTuber talks about this one, but it's straightforward. Everybody knows about this one. I mean, most traders know about this one. It's market capitalization. You don't care about the price of the stock. I just filtered out every stock on this watch list. At some point, I was watching these names. Okay. Avis car budget. $4 billion stock. Price of the stock, $114. Well, it is exactly the same as Mara, but it's cheaper than Mara, a little bit. Advanced Auto Parts, $70 stock. Market capitalization, $4.2 billion. Just to put it in perspective, you guys know these businesses, okay? You rented a car or you bought a part from Advanced Auto Parts. It's cheaper than this. Well, the only reason why it's here, I mean, it's either overvalued or it's, I mean, a lot of people will argue that they have Bitcoin on their balance sheet. Well, let's take a look at the revenue, right? The only way they have been funding the business is just diluting the shares, doing offering, and then basically, I mean, it's just, look at this company, 60 employees. They're just milking this company, okay? There's no intention of, if Bitcoin dies or if the entire crypto dies, they will pivot to something else, okay? That's what they have been doing ever since they went public, okay? It has always been a penny stock. 2021 revenue, 100 and something, 300 in 2023. Well, let's compare it to another stock. Maybe your wife spends a lot of money here. Restoration Hardware, $4.6 billion company, exactly the same. 6,000 employees. Stock price is $255. It is cheaper than this Marathon. Okay, I'm just putting into perspective. Just you guys understand. I mean, does it make sense that like market capitalization, the value of the company? It doesn't mean that this stock, Restoration Hardware, cannot move 50-100% like Marathon does. It does move that much. Like very recent move, Marathon had a 100% move. Well, this had a 50% move too in the same time period. Okay, so any market cap stock that generates a lot more capital than Marathon does, I mean, they have been moving. They do move that much, but a lot of people just don't pay attention to it. They just chase shiny object. If a lot of YouTubers talk about something, they just buy into that thing. There are 8,000 stocks out there, guys. You don't have to be falling in love with any company, and you don't have to be basically bearish all the time or bullish all the time. You can switch your bias every freaking minute if you want to, if you are trading, okay? But just don't get stuck on either side. Getting sucked into losing companies, or I mean companies that don't generate cash, or getting sucked into like watching like YouTubers, whoever, okay, influencers, whatever you want to call them, that basically preach about the stock, show you freaking presentations. I hate that when people just show freaking presentations. Show me the freaking money, okay? That's what matters in stock market eventually. Are they making money or not? If stock is making money, it will go up, okay? Nobody has to advertise it. Go freaking buy Costco, okay? They're making money. They will be making money. Chart tells the story, okay? If you just pull a stock and look at the chart, it will tell you the story. You don't have to do fundamental analysis. You don't have to listen to anybody, okay? So, but if you're speculating, good. Just understand that you don't want to you don't want to stay there too long. You just want to quickly move on. But again, these videos for educational and entertainment. Hope you like it. Let's see what happens after halving. But I am still neutral Marathon Digital right here, right now. Thanks for watching.